It's Thursday, January the 11th.
Who are you? Who are you?
I had to put my GPS on coming back yesterday to find the office. I've been gone so long.
I am so happy.
It's good to be back.
Yes.
It really is.
Yes.
And thanks to everybody for allowing me to work from Edenton, North Carolina through the first of the year and into the first week of the new year. Had a nice time, but at the same time, I was ready to get back to the office.
Yeah, and you still got a lot done.
Got a lot done.
You've been productive in the first 2 weeks.
Well, having that office in Edenton certainly helps for sure.
So we're all in control here. Well, this week has been another week of both ups and downs. Information this morning that drove the market off a little bit was the CPI information.
CPI came in hotter than anticipated, both for the month of December and year over year. Came in a little bit hotter, and the market is not liking it. You know, the market really has priced in, I think, this unfulfillable data that we're going to just bypass all the bad that can come down the road, and everything's going to be hunky-dory. And it's just not going to be that way.
Liz and I attended a seminar put on this week by First Trust, where an economist came in and he talked about how he thought this year was going to be. Overall, they believe First Trust they believe the market will be up, but they believe it's going to be a bumpy year to get it up. One thing he came out and said is that in their opinion, they do not believe there are going to be 6 rate cuts.
No, that would. If you were seeing 6 rate cuts, that would mean that the Fed way overshot where they should have been, and we have an economy that really is in bad shape. So I think at most we'll see 3, and probably those will be after the mid-year.
At the second part, the other part he was saying is that this economist for First Trust said at this luncheon this week that they believe interest rates will end up a little higher than the Fed. The Fed wants it to get to 2%, but getting it to 2 is going to be harder, and so there's going to be ultimately a acceptance in a different range, a little bit above 2, and say, okay, we got it where we want it to be.
Well, the numbers today jumped, I think, the year-over-year inflation to 3.7. So to get it to 2 is a long way to go. So I think that they're spot on. Is that it's not going to be a 2% in the next 12 months. If we're at 3, that would be amazing.
We still continue to believe, though, as they First Trust said, that the market has the opportunity, and we're working with the opportunity that by the end of the year it's going to be higher, but it is going to be a bumpy year. What it does mean is that what we do invest in, we're going to have to stay invested in, unless there is some big unforeseen event that we just say this is the game changer and we have to make a change.
So consequently, we've made some tweaks to your portfolios. We sent out in the email of last week, large cap value, small caps were 2 of the areas that we looked at and made some purchases in, and then the fixed income, increasing the duration on the fixed income side has been the changes that we've made.
All right, this will be a small blurb about it. We probably will not talk a bunch about it because it doesn't make a lot of sense, but it's in the news, so we want you to know we're right to it. This morning, the SEC said that we can begin to work in the areas and sell Bitcoin ETFs.
Yay.
Now, the term that has come out this morning that you probably want to know what does it mean is a spot Bitcoin. A spot Bitcoin is just a technical term of an ETF, exchange traded fund, that owns Bitcoin. You don't own Bitcoin itself. You own, if you think in terms of the S&P 500.
Yeah, or if you were to purchase an index or gold.
Gold.
You're buying the spot price of gold in any given period of time, which is the 2-day settlement of the purchase date. So it's complicated, but it just means you're buying what the pricing is for that particular investment.
We will, as a company, dive into it. We'll have an understanding. We'll have working knowledge on it. But we will go on and say to you, if you thought of the Wild Wild West as the the cutting edge of just way out there. It's on the other side of that. And until we can truly understand it, be able to explain it to you, make you feel comfortable, make us feel comfortable, it is not going to be something at this point in time that is going to be a standard piece of a portfolio.
Yeah, go ahead and flag this particular video because this will be the last time we talk about it.
Right. So we'll come, if we need to, we'll come back, but it was in the news today. We're aware of it. We're studying on it. We're talking to compliance. What can we do with it? What can't we do with it? We understand it, but that spot Bitcoin, all that is an ETF that owns an interest in Bitcoin. That's what it is. Well, if you have any questions about anything, if you have any concerns, if you'd like to meet with us, if you have a friend that you would like for us to meet or a family member, give us a phone call. We'd be glad to meet them. We're meeting new clients all the time. And we do it because we know it is your money.
And your money matters.
See you next week.